Are you ready for a service provider SPLA audit? Would you like to know how you can prepare for one so when it happens, you are in your best form? This video begins the series in which I will tell you the most important things every SPLA provider should have under control to avoid hefty SPLA penalties. So let's begin. Do you understand the scope of SPLA, the scope of a potential audit? There are actually at least 3 questions in one here: the technical scope, the accountability scope, and the time scope. The first question is obvious. Can you, with 100% certainty, quickly produce a list of all the locations, data centers, clusters, service, assets, domains, security groups, etc. in that part of your IT estate that you consider being your SPLA scope? Although it sounds simple, in my experience it's not that simple, and not having a firm and verified answer to this question is risky. Often, there are gray areas. If it's a so-called management cluster, should it be included in scope? Is that DR data center in scope? Do I have to declare this cluster from which I only provide fully outsourced services? There are 2 resulting scenarios of not knowing the answer to that question: understating and overstating. And yes, it's easy to overstate if you have a large platform or if your service catalog includes more than just basic hosting. If you overstate initially and then find out during the audit that a part of your IT estate should not have been included in scope, you will have to explain why. You may be asked to provide proof. Perhaps you will find that proof and that part might be taken out of scope. But there's a psychological danger there as well. The auditors will have already considered that being their finding. They will have set, subconsciously or not, a certain target that includes that part of your IT estate that you're trying to exclude. And now you're asking to take it out of scope, albeit reasonably. Of course, every experienced auditor expects certain things to be taken out of scope during the initial, the middle, and even the final stages of the audit. Your initial queries may not be even met with resistance, but closer to the end, the more you ask, the more resistance you will experience. The harder it will be to convince the auditor. You should rather be ready to provide clear and defined scope straight away at the beginning, to leave yourself more room for negotiation in case something pops up that is not as basic. Understating the scope is not a good idea either, although when you have a choice or when you have a gray area, I'd rather understate than overstate. If you deliberately hide anything, it can backfire later. Should say you have a different kind of an audit, the traditional audit. Your statements made during the SPLA audit will be taken into account and vice versa. So from the IT estate point of view, make sure you have a clear and defined scope. If in doubt, ask a subject matter expert. Some things do not necessarily have to be included in SPLA scope, and an expert can confirm that. Now, remember that I told you that there are at least 3 questions when it comes to scope, not just one. And here's the second one. Do you understand the scope of your accountability? Almost in every SPLA exercise, I hear a statement like, "We only support this service up to the operating system level." Translated to the licensing language, it usually means whatever our customers deploy in their virtual machines does not concern us because we're not accountable. If only it was that simple. The harsh truth is, you are. You are accountable for every license that is deployed in your estate. You may and you should put measures in place to transfer some of that accountability to your end customers. But please make sure you realize that in a SPLA audit, every single piece of Microsoft software, every relevant metric will be measured and audited and inventoried, regardless of if you support them or you don't. Can you guess what is the average share of penalties related to operating systems and database, the 2 pieces most often recognized by SPLA providers as supported? It's only about 10%. 90% of the initial audit shortfall is due to the unsupported licenses a SPLA provider may not be even aware of, or you may be aware of them but you do not consider them your accountability because you're not responsible for them, technically. It's not all doom and gloom. As I said, you may put measures in place, and one of those measures is the often neglected requirement of a service provider license agreement, SPLA, to attach end-user licensing terms to each of your end customer contracts. Only when you do that, then you may refer to this paragraph of SPLA. In essence, offer Microsoft cooperation instead of paying penalties. Be ready though that Microsoft and auditors may ask you to provide more written proof. For example, a section from your end-user contract outlining clearly the licenses that you do provide and the licenses that you do not provide. Or a letter from the actual end customer acknowledging their licensing accountability. So to recap, all the Microsoft software will be in scope initially, whether you support it or not. Then the onus is on you to reduce the scope. As with the IT infrastructure, there is no reason to wait until the auditors knock on your door. Do the following today. Review and update your end customer contracts. If you have not attached the end user licensing terms, as SPLA requires, do that. Run inventory tools in as many end customer machines as you can. Identify all Microsoft software there that is above the level that you support. And again, if in doubt, ask a SPLA expert. As for the third part of the scope question, this one is about scope duration. And here's a quote from the Service Provider License Agreement version 2017. Microsoft will presume that unreported use began upon commencement of each end-user relationship with customer unless customer reasonably demonstrates a different scope and duration. If you ask me, it's pretty clear. If an auditor finds something they could see as unlicensed use, they will multiply it by the number of months from today back to the date of commencement of your services to your end customers. And you can count on it, it will be the worst case. As it is stipulated, then it is your responsibility to demonstrate a different scope and duration. Let me give you an example. Say you've just recently deployed a new cluster, and then you moved some of your customer virtual machines into that new cluster. If you don't have evidence to prove when you deployed that cluster, you don't have any change records, purchase records, then they will look at your end customer contracts and take the earliest date of commencement of services from those contracts and multiply your current usage by the number of months back to that date. Because from the basic audit inventory and the contracts, that is what it looks like. And with that as well, you can start your preparations today. Find all available evidence, purchase records, change records, contractual evidence, even emails. Any piece of information that has a potential to reduce the scope. If you'd like to learn more, please subscribe to this channel and hit the bell button so you do not miss any of the videos that I upload at least once a week. I have only barely scratched the surface of this SPLA audit subject, so please stay tuned if you want to learn more. Thank you and have a nice day.